I wanted to thank the Chamber for inviting me. And thank you, Vipulbhai, for joining this session. Rajesh, thanks for setting this up. Appreciate the vision and the topic itself, growth through consolidations. I think it's a time in our history which will really go down as a period when everybody had a chance to think through and to really look at models, our professional service firm models and our practice models differently. And time will judge us. What did we do with this additional time on hand? Whilst one may say work from home, it's not always a leisure time. In fact, some of us feel that we're working much more now than we were in office because various reasons. I think productivity has gone up. But can we then think differently in today's times and say, why do we need to, work in silos? Is there a merit in thinking about, working in groups, working with like-minded people? So I think, therefore, Rajesh, my full compliment that the topic that you have thought really addresses that can we grow our practice through consolidation, coming together, working together, perhaps if all goes well, even merging with like-minded people and like-minded friends. So my thought was, let's look at some context first. Obviously, I'm going to spend the next 60 to 70 minutes just going over some context, some thoughts. I want to share my practical experience of what models have worked, what models haven't really worked when we start working together with like-minded firms. And when we're talking about consolidation, what are some prerequisites? If you see on this screen, I've put a session flow, and essentially merging of minds precedes merging of firms. Very, very important. It's important that we have the right mindset to grow together. But working collaboratively needs a very thoughtful effort and a very conscious belief in the fact that you'll have to give up a lot. You'll have to give up something to gain something with the larger belief that we'll all grow together. So there's a conundrum here. You will be accountable to more people than you're currently accountable to, but your fundamental trust and belief should be that it'll all circle back and you will do bigger and better. So that's just one thought that I had. So I'm going to spend some time on each of these, and then we'll end the session with a call to action. How do we really execute the how of this? It's always good to hear some new thoughts, but you want to go back tomorrow, Monday, and say, what can I do differently when we talk about growing through consolidation? I'm going to spend some time on that, and then we'll break out for questions. Happy to take as many questions as I can. And we'll also share this presentation and the video, I'm told. So you can always write back for any further questions. So that's the flow. There is a Q&A box I think you would see as participants. And do put down your questions so the the conveners and the team here can keep kind of posing them towards the end. So I'll try and address each one of them. With that, let me start with a very basic kind of thought, a very basic concept that is growth important? Sometimes I hear from firms, why do we need to grow? We're doing well. Nothing has changed in our lives. The tax filings have gone online. Audits, yes, we are doing smaller audits. Doesn't matter if the larger scams happen, NFRA comes, we're not covered. Why should we bother? But friends, essentially, whilst today in COVID times, one may argue that survival is also growth. But the real growth comes to all of us, and we have the opportunity hanging before us. We can see it, provided we are willing to disrupt ourselves. I have underscored the word willingness or willing and disrupt. So it's about mindset. Am I willing to look beyond my day-to-day practice? Now that I have some more time to think and reflect, how do I think about really disrupting from a growth perspective? What are the various contours? So one such disruption is consolidation. Okay, and that's for the theme. So just look at today what is happening around us. I think this is something which all of us know. Whilst COVID-19 has shaken the professional service world, it's also thrown up new opportunities. There's a lot of uncertainty, right? Today we don't know how clients are going to react to our fees, to our new propositions, new proposals. Sometimes clients will not want to pay us, or they'll do a deferred payment. They'll want to start talking about discounts, right? I think all of us will see a similar dynamic. There'll be clients who will say, okay, we are doing fine and we are going to pay you what we agreed, but don't expect any major increases, right? That's one. Sometimes clients may discontinue some discretionary spends. And in that, beyond the compliance, there'll be some services which they'll say, Abhi ruk jate hai, let's wait. We'll take it next quarter. They'll defer it. The compliance deadlines have got extended again. November 30, maybe it'll further get extended. Your billing cycles will change. Okay. So therefore it's imperative that we take cognizance of what is happening around us. And in that context, I think it's very important that we also have some recalibration in the way in which we do our business or the way in which we practice our profession. Right? We are all running a professional service firm. We are into the profession of accounting, not into the business of accounting. And which therefore means that we are not, when we are not physically able to go to a client office or they are not able to come and meet us, we need to have meaningful conversations online. Very clear focus. If some of you are on Zoom throughout the day or WebEx or GoToMeeting or whichever platform you are using, I think it's so important that you have to reskill or make sure that the conversations are meaningful. A half an hour call, can you finish it in 15, 20 minutes? A 1 hour call, can you put it in 20 minutes? Is there a way to save time there? Otherwise, it's going to get stressful. When I started up in March and April, I realized I'm not leaving any time for myself to do anything else. And then I started cutting down. I kept thinking about it. And I said, can I pass on something to my other partners? Can they pass on something to somebody else? Can I keep passing on the team? So when you talk about collaboration, it's all about making sure that you focus on priorities. And when you are doing a call, obviously you want to have a very clear, focused meeting. And to that extent, I would also say that geographic presence today is less relevant. What is more important is subject area expertise, and which, if one can deliver seamlessly through online platform, even better, right? So in that sense, around us, we are trying to seek information. You're seeing China getting aggressive, US having its own pulls and pressures on the world. And we're trying to make sense of trends. What happens to our profession? NFRA is active today. The regulators are going slow right now, but they will bounce back. It's natural to feel a little worried, right? Nothing wrong in that. But can we do something? So one aspect that I've observed, and I've been thinking about the profession for almost now 8-9 years. I wrote something as well in a compilation that I published, and we were looking at trends, me and my co-author, when we wrote CA Firm of the Future, and we said that one dynamic is we continue to work as disaggregated practices. We are still basically working in silos, a proprietorship firm, a 2-partner firm, a 3 or 4-partner firm. Can we go beyond that, and can we have a larger group of people to grow together with? So let's say most of you, I'm sure, are members of CTC, and you don't have to be only chartered accountants to be members. I'm sure even lawyers can become members. And can we have multidisciplinary partnerships if the law permits and if the regulations permit? Or at least can we have combinations of experts and skill sets working together? Think of a hospital, right? Think of a hospital and think of a single doctor having his own clinic, your family doctor, great guy, excellent servicing, you trust him. Then from a single doctor to a specialist clinic, to a polyclinic, to a hospital. If you look at the same model from our accounting profession perspective, as a sole proprietor to 2 partners to 5 partners to more than that, one has to think beyond the current disaggregated practices. Friends, that is really a good way to think when we think about growth. Why should I keep doing what I'm doing? Why can't I keep passing on and focus on specialization? Look at the client dynamics. Clients will expect and continue to expect full service models. And because they see that if I'm getting GST and income tax and audit and consulting, business advisory, M&A from the same firm, there's so many efficiencies associated with that. Keeping 144 aside and independence aside, you can still do a lot of things for a lot of your clients. If as audit regulations change and when you're not allowed to provide any non-audit services, that's a different discussion by itself. Today, even within the ambit of 144, a lot of services you can still provide as auditors. And if you're not auditing a particular client, you can do virtually everything. But therefore, if clients are going to expect full service, are we equipped? Do we have the right model, the infrastructure, and therefore the right set of partners and people around us to be able to provide a full service? Are we the hospital? Are we or let's say it could be a specialty hospital, 5 doctors, 10 doctors, etc. And we are focusing on 2 or 3 or 4 things. We don't have to do everything. But the status quo has never been riskier. We will have to think through how do we want to kind of position ourselves before the clients going forward, especially those clients who expect full service models. And isn't it therefore time to think differently? Okay. Also about growth, your firm strategy, and which means about working together. So can we work together amongst us? This group itself, I'm sure most of you know each other. Okay. How many times do we actually refer clients to each other? Do we see a larger game here, a larger play here? Look at how the accounting profession has evolved over the last 100 years. Look at the big four firms that have entered the country 10, 20, 30, 40 years back, some of them 100 years back. Ultimately, it's the right people coming together under a common umbrella, right? And therefore, the brand of a individual or a surname or a name should be subservient to the larger group, the larger goal that you want to really grow. Once you think about growth and you have that mindset, really the name shouldn't matter. So can we think about working together? I think if that is a thought, and if we are also clear that we'll have to think differently in terms of reinventing ourselves, because the practice has to be pivoted to growth with a lot of opportunities. The world is changing every day, every week. We are seeing newer platforms, newer ways of working together, newer business models. Look at education. The whole industry is moving online. you know Kids are not going to go to school as much as they used to. Hopefully things will get normalized, but they may still do alternate days. We in our own firm said, why do we have to go to office every day? Even when things normalize, maybe we'll go twice a week, once twice a month. That's it. We don't need a large office. Can we cut down the office space from hundreds whatever to, let's say, 10 or 20 or 30? Can we save on that rental cost? you know some basic decisions, right? And can we therefore focus on reinventing ourselves as professionals, working in collaborative models? And I think today is the time. There is no better time in my view than today to re-examine the way we are thinking about growth. Yeah. If one is aligned so far, let's look at what are the models. How do we really work together? What does consolidation of practices, consolidation of CA firms, aggregation of skill sets actually mean? Okay, so I'm going to talk about the working models, what has worked, what has not worked. There's no one right size or one right way to think. There are various models. One has to choose a model to start with and then kind of move forward. And I'm going to talk about that. What are some do's and don'ts? What are some criticalities in terms of having the right mindset? And then if you are thinking about a merger at some point as you have grown, how should you think about that as well? And I'll try and correlate some practical experiences. In my 26, 27 years of practice, started in Bansi Mehta when I was doing my articleship, and then when I qualified, I was lucky to find three partners who were thinking alike, and we set up KNEB as a firm in '99, and we have not looked back. It's been 21 years of amazing journey. Looked at US and India as a model. Two of my colleagues were US based, two of us were here. We've scaled up to 20 odd partners, 300 odd people between India, US. We also expanded to UK, Netherlands, Singapore, and Canada. And we just followed some of our Indian clients and we said, can we work collaboratively with people outside of India as well? Okay, so when we looked at the models, we found that there are really 3 or 4 ways that one can work together. There may be a fifth or sixth way as well. But what has worked in the past? So one is, I call it the referral model. Okay, I work with Rajesh Shah in this room, and I tell Rajesh bhai, here is how we will work together on a common client. Okay, I don't need any fees from you. I'm going to refer clients for your expertise and assume that you will give them the best. Okay, it's not about compensation. It's about, can you give the best service at an efficient price point, and can you be communicative to the client in terms of what you are doing? Whatever I need to make in this, I'll directly go to my client. I will, if I am even coordinating something, if I think I should charge a fee, I will go to my client and I'll charge a fee. I don't need anything from you. I'm going to keep it clean and neat. And if Rajesh bhai has a practice point where he sees something that we can do, he will reciprocate. That's the assumption, but not the intent. The intent is, let's get the best guy to provide the best service. So I'll take an example. Let's say tomorrow I have a problem in my back and I go to my family doctor. Okay, very clear, simple example. Family doctor said, okay, take a whatever painkiller or put Volini or whatever. It doesn't solve. He'll have to refer me to a orthopedic. or a specialist who understands back issues, and he'll say, okay, do some exercise, do XYZ, get an X-ray done. So what has the family doctor done? He has referred to a specialist. Looking back at our profession, at some point there'll be services which we will not be able to provide, or we may know these solutions, but we don't have the experience or the expertise, and I will refer to a like-minded firm. Now that's a first point of reference. Let's call it most favored firm or one of the most favored firms. Okay, here I trust the judgment, the experience, the advice of that firm that I'm referring this business to. Yeah. Ultimately, to my mind, it's easy to start. Often it's the best way to start. But our experience has been that it will not go a long way unless there's traffic both ways. There has to be something coming back for you to be interested. Very few have a one-sided or a one-way traffic kind of referral. It doesn't work, because then my partners will feel at some point, what am I getting from that law firm or that XYZ firm that I'm giving them so much business? Maybe there could be some other firms in the market. So referral model has got its kind of challenges, but if you can kind of think that through, it's a good, easy starting point, and then you progress from there. Okay, so that's the first model, the referral model. Very easy. I'm sure all of us are doing it. Let's look at the next model, associate firms and network firms. So I'm sure some of you have this experience and you have been part of larger networks, or you have associate firm relationship with other firms. To my mind, one should have a very clear choice and one should be very strategic about it. That A, is your brand important to you? If your brand is important to you, you can't get into a network. Network by definition, if it's a membership network, okay, you have to lose up your brand. Then it's like a KPMG or a Grant Thornton or some of the larger brands. They'll expect you to work in their brand, which means you lose your identity as a brand, but the pie is much bigger. Vis-a-vis that, you have associations or associates where you don't necessarily give up your name, but you can still say I'm a member of so-and-so association, worldwide association or India association or Mumbai or whatever geography you want to be in. And then you have the best of both worlds. You have the ability to work with other professionals across geographies, or take their expertise in your own geography, and yet have your own identity, your own independence. So again, there's no right or wrong. There's no one way to think. Maybe one can start with associate firm relationships and then migrate to a network firm if one sees the benefit. But obviously, one has to be very clear that you have to give up a lot. And I'm going to talk about it as we make progress. But associate firm, network firm, to my mind, a network firm is a no-brainer if one believes in the whole process of collective growth. Okay, your brand is ultimately you. You are a doctor, you are a specialist. Ultimately, when you go to the hospital, there's always a surgeon over the hospital argument. That's one of my favorite kind of comments, that look, ultimately the patient will find the surgeon. Your tax client will find you. Doesn't matter what's the name of your firm. Beyond a point, it is Rajesh Shah, it is Vipul Chokshi, it's XYZ. It is your brand that is synonymous with the firm's brand. And you have to believe in that you will keep getting your clients, your patients back to you. If that fundamental belief is there, then really giving up the brand shouldn't matter, because that's one prerequisite of working together in a larger construct. Okay, so from a referral model to now an associate model versus a network model, to thinking about one more step. And again, I'll come back to some more examples that I had, but really the larger than concept is, should we then work together as one firm, have a single bank account? When I say single bank account, it's all pooled in, and should we think of a merger? Now, this is easier said than done. I think it's very, very critical to understand here that this doesn't happen instantly. Okay, merger is something which one has to really, really think through. And to my mind, the best step is put down a document and say that, why are we merging with this particular firm? What is my rationale for merger? Is it to add specialist areas? Therefore, depth of knowledge in a particular area. We know GST, we know FEMA, we know transfer pricing, we know M&A, but we may not be doing enough work, or we may not be having the right clientele. Can I add that? Do I need to merge at all? Can I just do an acqui-hire, get the right partners in? Okay, that's also a way of kind of growing, and that's another way of kind of merging a practice in, and not really a firm in. Then the document should talk about geography, size, scale, Okay, what is it? Do you want to be an all India firm? Do you want to be an international firm? Do you want to be a Western firm? Then is there client relationship that they will bring on the table? Are they adding products or services? Is it important for you to have a larger firm positioning in the marketplace? Should this be a consortium for bigger bids? How should you look at merger? I think it's very critical that before you even start thinking and talking to a firm, you should have your rationale. Why do you want to merge? So now we have looked at, associated network firms. We have looked at referral arrangements to start with, graduated, and now we are saying, yeah, this firm looks good. We seem to be having a lot of complementaries. There's very little duplication. There's very little overlapping. Even if there is, we can still work out. Let's kind of merge. Let's kind of work together. So each of these models has got some amazing benefits. Let's look at those. Okay, so when we say an associate firm, ultimately, from a referral model to now working together, you basically want to strive to work as partners. Okay, but here, and again, this is coming from day-to-day experience. We have several associate firms working with us. It's so important that you have clear expectations on responsiveness. So in my firm, a client email has to be responded in 24 hours if it's a weekday. If it's a weekend, a Friday email can be responded on a Monday. But if it's a Monday, I have to respond by Tuesday. I cannot have a situation that an email doesn't get a response. It could be a holding response. You can always say, thank you for your email. I'll revert back, or the right person will revert back. Your client wants to know that you have received something. In today's time, you can't not respond. Now, is that the same level of responsiveness that I see in a partner firm, in an associate firm? Then fee levels. How are we charging? Is there some parity? Do we need to upgrade ourselves? Do we need to kind of reposition their quality of work? Very, very critical. The depth of work, the quality that is perceived by the client and the market, and the feedback mechanism. How do we give each other feedback? Because you are not having a single bank account, you are still different firms, you're still associate firms. It is so critical that you set these expectations. If I don't like a output or an opinion or a product or a assessment, any service that I have outsourced to that associate firm in that geography, I should be having, without any fear, a ability to give feedback and to seek feedback. And that's how you kind of graduate and you grow. So this has to be thought through. Maybe an MOU. I would always recommend a written understanding. It helps, but very few people think through it. I've not seen too many MOUs, but that's one way to think that let's put down what are the broad contours of working together as associate firms. And then the final thing is you have to work as partners. You are separate firms, but ultimately you want to make each other grow. So can we strive to work as partners? I think that is, again, a very, very critical aspect here. So that's about associate firms. Okay. Let's look at, a similar model, but network firms or network partners. And I'm just saying some do's and don'ts here. Look at, again, even in associates, you think of partners. In network, all the more so, one has to think of them as real partners. One has to think about having products in the market which are harmonized, which are synchronized. So let's say if I'm in Mumbai and I have ABC in Hyderabad or XYZ in Bangalore or DEF in Delhi, I should have a singular product in the market. They may still not be branch offices. They may still be separate firms. Okay, that's fine. But we are part of the same network. Institute of Chartered Accountants has very clear rules on networking. You can register yourself as a network. And I'm told now by a few council members, and even the president spoke about it of ICI, that new networking rules are coming this year. So just wait out for those rules. You can actually register a far more robust network with the ICI and be very formal about it. Okay, they are going to define those, but you ultimately, to my mind, if you are working as a proprietor or two or three partners, you have to give up that mindset and say that let's do a lot more. Okay, work as real partners, make sure the trust and confidence is there. And there, our experience has been very interesting, right? It's not been so easy. Okay, I'll admit and I will tell you, it's not easy to work as network partners because there's a lot of cultural issues. There are issues on sometimes even the speed of response, the ability to think differently, investment in technology, investing in people, investing in infrastructure. Okay, now we are not a product like a coffee machine that if you go to a cafe coffee day outlet, every outlet should look the same, or a bank like ICICI Bank where every branch should look the same. One can have different infrastructures, but more than that, the mindset should meet. It's important that we deliver services in a manner in which it allows consistent, let's say, experience. So, we call it in our firm, we call it the KNV experience. Can we give a similar experience to clients across the world, wherever we are rendering a service? It should not be that Mumbai is giving a different level of service than Bangalore, or Delhi is giving a different service than Pune. It should be a consistent minimum level of service. You'll always have surgeons who are different in different hospitals, but the basic surgery has to be the same. The patient has to recover fast. Those basics don't change. If somebody is going the extra mile, that's above and above the minimum. That should not change the other, in some sense, the whole delivery process, the quality control process. I think if that happens, if you can spend time in having or defining processes of delivery, processes of knowledge repository, processes of quality control, quality checks, engagement quality review, EQR, it's all mandatory now in audit at least. You will be creating what is called as customer trust, and client confidence. If you look at the bigger firms, they will not sign an audit opinion till there's multiple levels of review. Well, the fact they still fail is a different story. That's something which is overriding a process. But in network or in a networking arrangement, processes will be very, very important to define. What should your MIS be looking like when you're coming together? Yeah. When we say working as real partners, are we going to split the bank accounts? Are we going to split the revenue? Is there allocation of revenue and costs, common costs, branding costs, technology costs, knowledge repository? And why are we consolidating? Why are we coming together? It's one of the biggest advantages. Do you get largest economies of scale? So why should we not take advantage of having larger practices? Your Office 365 license will be far superior. The cost that you will end up paying will be a fraction of what you would otherwise pay for a 10 license. When you have 200 or 500 or 1000 licenses, you will get everything at a far cheaper cost. Your practice management systems, whether it's timesheet, whether it's recording of, with your HRIS and HRMS systems, your performance management systems will be very, very different. So it's all about thinking about aggregation, and that's what a network brings on the table. One is, of course, working together, and second is all the functional areas. Why can't we share, let's put it this way, markets and branding, of course, within the construct of ICI, within the construct of what's permitted as per code of conduct and as per ethics, but you can still write, you can still talk, you can have a knowledge alert going out. Can we have some common branding and marketing tools and processes? Can HR be common? Can technology be commonly administered? Admin, accounting function? I'm pretty sure that if you start thinking about it, you will actually end up saving a lot of costs. You'll have common teams across the country to monitor each one of this. And therefore, in that context, ideate for efficiency. How can we work together? Now, after COVID, most of us are going to question, do we need large offices? Do we need our guys to come Monday to Friday, Monday to Saturday? Can they come twice a week, thrice a week? Maybe they can work 50% from office, 50% from home or at client side. A lot of efficient process will come, especially in cities like Mumbai, when commute time and travel time eats into your efficiencies. What are the right ways to work together? And as a larger network, there's so much more that you can do by being so much more productive. Now, it is very, very important, excuse me, it's very, very important that if we think about network, okay, and working in a network, it has to be high priority. You can't think of doing it once in a month. I'll think about my network issues once in a while. You have to have a very, very focused effort at making it work. I say make it count to make it work. You have to think, in fact, in the initial period of the network, when you're coming together to achieve all of these benefits of a network, you need to have a lot more focus and lot more time and lot more allocation of time so that you give it the priority it deserves. So for example, when we looked at growing KNAV across the globe, we found people in, let's say London, for example, right? There are amazing Indian chartered accountants out there. And there are also, of course, British chartered accountants. Now, there are challenges of working in a culture which you don't understand. We found Indian chartered accountants who have settled in London and in Dubai, and across the globe, even in the US, who share similar mindset of growth. Now, if we can find them overseas, why can't we find them in India? There's so many firms who you think you'll be able to relate to. Now, if it's a question of, all the webinars, the seminars that we have held over these years, all the CTC, the chambers, the wonderful RRCs that we conduct, I think that's a place to meet people across jurisdictions. I'm sure some of you have grown with that. Some of you have made associate partners in other locations where you are not present. But those are the forums. And you have several other forums. The Institute does wonderful events, larger events. And now with webinars being the way to think and to meet virtually, I think virtual meetings will make sure that you don't have to go and travel. You can still achieve a lot of those things. Even selection of a firm can happen virtually. You obviously want to meet people. You want to make sure that it's, this is the right partner to work with. But remember, in a network, you are still not merging. You are still independent firms. So your risks are pretty shared in that sense. And whilst you want to select the best, if you end up selecting a suboptimal partner, you can still make edits. Your agreement should allow you to kind of move back to day one or to day zero. Okay, so just plan it well. But clearly, from a referral model to an associate model to a network model, this is the most superior so far. Okay? We spoke about merging, and I'm going to talk about a little bit about why this is the way to finally grow. So you move one step. So from a clinic to a specialist clinic to a polyclinic to a hospital to similarly a proprietorship firm, small partnership firm, referring to other firms, making them associates, making them network partners, and then merging. It's a scale. It's a time horizon that you pass, right? But here is some rationale. We said, let's have a very clear mindset of why do we want to merge. If you are clear on the why of it, the how of it is not so difficult. Okay. So one of the things that I would always ask is, what is the real differentiator in your firm? When you are seeking collaboration, when you're seeking to grow through consolidation, okay, what is the real differentiator? What are the distinctive service areas? How are you defining those? Are you doing audit and tax and consulting and XYZ areas? Then that's one way to think that, yeah, I'm doing everything. But is there some USP? Is there something which identifies your firm? So I know if I have some FEMA work, I'll talk to Rajesh by anytime. I'll pick up the phone, I'll speak to him. I identify him with FEMA. Now, there could be somebody else who will say, here is GST, here is transfer pricing. Now, the question is, if that is the differentiator, okay, is there a way to think that what if we were working together in a different construct? Could we have grown the pie faster? So that's first point. Make a strategic choice. What do you want to do in your firm? You may be 2 partners or 3 partners or 5 partners. You can't do everything. For that, you need a lot more people, a lot more time. It's becoming sophisticated every day as we speak. Okay? And the disruption will mean you need fresh ideas. So you do need to think out of the box. So first is you define what is your clear differentiator. Once you have thought through that, okay, you can then progress to say, should I be focusing on specialist services? Is it time to say that expertise is valued? Yep. Who gets paid well, a specialist versus a generalist? By and large, the answer is very clear, right? Now, should we have in our team a specialized batsman, a specialized bowler, and a specialized wicket keeper? Now, if Virat Kohli is going to bowl and he's also going to keep wickets and he's also going to be a captain and he's also going to open the innings, that doesn't happen. You can't expect an individual to be great at everything. There are gods of our profession as well. But by and large, for us lesser mortals, we can do 1 or 2 things right. We can't do 3 or 4 things right. So it's so important today that the whole argument of specialization, and we've been writing and talking about it for almost a decade now, it's time to think about really where does your expertise lie? Okay, so both of this, making a strategic choice and valuing the expertise, if once you make that determination, this should reflect in your merger rationale document. That, okay, our firm is great in tax, direct tax, even indirect tax, we are reasonably good. We can do with a little more depth, but we understand the law, we understand GST pretty well. We can advise our clients. Audit, we are not so sure. Our documentation, the audit exposure that we have, perhaps it's very risky now to audit listed companies than in the past. Under the Companies Act, there could be a class action suit. It's becoming difficult to kind of match the expectations of regulators. Should I be looking out for an audit focused firm? And can we ally together? Very basic way of thinking, right? If you make that determination, you have made a good progress. That yes, you do need a larger firm. It could be a network partner as well. But in a network partner, you are still basically, a part of a larger ambit. So if it's an international network, great, because then you have the world is your oyster. Indian networks, I've not heard of too many network firms. There are a few, but I've not seen real growth happening. The merger model is where the real growth has happened. And that's where it's a question of trusting the partner. So to my mind, and I was sharing some thoughts when we were beginning this session, that mindset is so important. If I trust somebody and if I'm thinking alike, okay, I will resolve any conflict that comes. See, today we have not met our partners for 3 months, 3.5 months. We've not gone to offices, but we are still talking every day. We are still meeting remotely. We are still growing the firm. We are still, taking care of client situations. We're thinking alike, and it is that alignment, okay, the aligned goal and direction, which will take us ahead. So if the mindset is there, that if I am doing audits and my other partner is taking care of my direct tax, somebody else is taking care of indirect tax, somebody else is taking care of advisory and consulting, we know who is doing best. So if that mindset of merger can be developed by thinking about trust and thinking about thinking alike, you now have a right ingredient to identify a firm. But just one more word of caution before you think in that: make sure that our house is in order. Okay, you can't grow or you can't think about merger as a solution. A merger is never going to solve an existing problem in your firm. Remember, it's not a solution to partner problems. You first have to have your house in order before inviting somebody in. That's a very critical aspect. Make sure that your compensation policies, your performance appraisal policies, your quality review processes, these are all well defined and they are working as a well-oiled machinery. Don't expect that because another firm is coming in, these things will get solved on its own. In fact, it will compound. So this is an important step. Once you cross that bridge, then I think I have just 5 bullet points. I'm not going to go deeper into how and why. We all know how to merge. But of course, our Prime Minister had this vision as well 2 years back, 27, 2 or 3 years back, maybe 2017. He had mentioned this on the Chartered Accountants Day, that can't we have a larger Indian firm? He used the word big eight. I really don't care about any tag that we give. It's about coming together of CAs and CA firms, right? That is the first. We have to start networking better. We need to think about working together first. It's like the courtship before the marriage. Can we start working on a few clients, be comfortable with the output, the delivery, the responsiveness, all of that? If you cross the bridge there, then you can have a basic term sheet and say, let's define the rules of the merger. Okay, how should we appear? How should we work together? Look at an MOU or a term sheet. Okay, define the decision making, the governance process, and then get into formalizing it with the partnership deed, uh, ensuring that you have a single bank account. Now, when I say single bank account, of course, you can have multiple bank accounts for service lines and all, but it's all in. It's not that my old clients remain with me, new clients will now come in the merged firm. That doesn't work. Okay, from experience, I can tell you, it's all about thinking that we are going to share a common pie. And whilst we may give up initially, the pie will grow enough that we'll all make more and more each year. Our teams will keep growing each year. We'll all have a far more healthier, work-life balance. We'll have more time for ourselves because there's somebody else to take care of a lot of the areas. I don't have to worry about the firm's admin or HR or technology or markets or branding because there is somebody else in the larger firm. I will do what I'm supposed to do and what I'm best at, what makes me happy, what I'm known in the market for, and I'll sleep with good trust and sleep well assured or rest assured that there's somebody in the firm who is much better than me in a particular service line, and let him handle those clients. So that's where you are effectively you're giving up your brand. I would also say you're giving up your ego. Keep the intellectual arrogance aside, but start working together, and that's where mergers can be really, really productive. But friends, it's hard work, it's laborious, intense efforts. Okay, the lot of think through. So I'm just depicting some things visually here. Think of synergies that you want to share. Think of what are we going to achieve. So is there a cultural fitment? Okay, is the organization structure already aligned for merging? What are we going to get by coming together? Is there some synergies that we see? Um, one may argue that I can now be a real full service firm across the country, which I was not previously there. But you also have to ensure that in this depiction, things below the water, you have thought this through. You can't have efficiencies getting challenged. You can't have flatter hierarchy in one firm and a very hierarchical other firm. That doesn't work. You have to think those through. Okay, the cultural fitment is very important. We have had challenges working from even Mumbai and Delhi. Delhi is a different culture. Hyderabad is a different culture. Chennai is a different culture. Mumbai is a very, very different culture. Okay, there will be pre-merger issues. There will be challenges. There will be you will always have questions even during the merger process. Before there'll be pre-existing internal issues. Not every partner will be aligned. You first need to address those. Very, very critical. Don't get into larger or very serious discussions till your partnership is completely aligned. It's very important that you get everybody aligned to a singular model. So let's say if there's a managing partner in the firm, it is a managing partner's job to get the alignment before you start getting out the outside firms. See, again, I'm not saying that it won't happen. Of course, it will happen, but you got to give that assurance and confidence to your other partners that the pie is growing. You go in that with an open mindset to make the merger work. Okay, if you think that, then it's not too difficult. There are a few steps or a few phases. Of course, there's a pre-planning phase. We've already discussed that. You put down the purpose, put down the rationale. Okay, get your processes in place. Phase two, very, very critical. Find out everything that you want to know about the firm that you're going to merge with. Okay, choose your parameters. What kind of firm is an ideal fit? Okay, should there be an open search process? Should there be a confidential process, a closed process? Should you look out for references? There's no harm in asking and checking, and tell that firm that I want to know more about you. Can I meet your clients? Can we go and talk to people? It's always better to be open-hearted. It's easy, because tomorrow if things don't work out, you have been transparent. Get everything and anything that you want to know about each firm. Share your data, get their data. Okay. Now there are merger checklists. I'm happy to share. I've written a chapter on making mergers work in my book. I'll share that chapter as well. But there are certain, just like you do a due diligence on an acquisition. For some of you into M&A and transaction advisory, when you look at your client buying over somebody or your client selling to somebody, there's a whole due diligence process. A lot of those questions even apply to professional service firms. Make sure that you have reviewed that data. Yeah. Very important is spend time with everybody, not just their managing partner, but look at all the other partners, look at some key people, make sure that you understand their philosophy and working style, their vision, their risk tolerance, the quality, processes. Then when you sit down to kind of negotiate, normally it will not be that they are equally sized. They'll always be a different size. Either they are bigger or smaller. Now you need to do negotiations with an open mind, open heart, but clearly with a forecast of what the companies can do together. Okay, where can we take? So let's say my revenue is 100 and that firm's revenue is 50. Combined is 150. Can I take the 150 to 200, 500, 1000 in 5 or 7 years? Can we have that vision? And how will it happen? Right. So think about who will do what in the larger merged ecosystem. We mentioned formal diligence. So this is the time when you do, after you've negotiated transaction, go detailed, look at very specific items in the P&L. Okay. And then there are post-merger issues, and this is where some challenges start. It's after the marriage that you realize, what have I done? Could I have really thought through this better? Is this what I want to do? So anything that's going to break, or anything that's going to question, do it before you sign on the dotted line and not after. So think through a post-merger integration plan, and I'm happy to help in anybody getting into merger issues. How should you think about the post-merger equation? You sign a deed on a Friday evening or a Saturday. Monday morning, you're going to work together. So make sure that you've thought through everything in the post-merger issues. That making mergers work, when I was writing that, I realized that there are so many things which we take for granted. But when it comes to actual execution, if you've not thought through it, it can be a big challenge. And even introducing partners in bank accounts, introducing partners to clients, there should be a process. Client transition, client handover, relationship handover, servicing handover, responsiveness, standard stationery, lot of things. So keeping the admin issues aside, the challenge is always to make sure that I have done justice to my clients. I'm adding value to my patients. I'm giving them a far better depth of a product offering and a service offering, which I was hitherto not doing. So you need to think through in your integration plan each of this. for the merger to be really successful. When you talk about integration, here I've just put down some 7 or 8 boxes. Culture, of course, governance, very important. How are we going to take decisions for the merged firm? Will we have one managing partner for the combined firm? Will be having a chairperson? I think I would say larger the firm, you will need a lot more structures. But you remember, you cannot have 2 captains in the team. You can have a vice captain, but you need one captain in the team to call the final shots. You can always have a coach, and you can always have a selection committee, and you can have all of that. You'll have senior players in the team. I'm just using cricket analogy to make it easier. But even in our context, there'll be senior partners or people who've been with the firm for longer time, but they have not grown. They have some limitations. Now you have to take care of them as well. Okay, they are not deadwood. They are there because they are playing a role. Not everybody will be a Virat Kohli or a Rohit Sharma hitting sixes every over. You also need the second player and the third player and the fourth player to make a team. So you have to decide who will make the larger decisions. Should it be a unanimous decision? Should you have 75%, 60% decision making votes? How would you want to define? And again, there's no right way to think, right? You need to have some areas are reserved matters. Your partnership deed should provide for unanimous decision. Admission of partners. You need 75% vote, 80% vote, 100% vote. Okay. Selling out a business unit, selling out a team, expanding geographically. So you need to define how is governance going to be mattering in day-to-day decision making. Then performance issues. What are the performance standards? Can we integrate billing rates? Should we have standardized charge out rates across geographies? Then look at very clearly the fourth box, practice areas. We need to be very clear, what are we offering and what are we not offering? So when we started our firm, we said, we will not do the regular income tax practice by going to the assessing officer and closing an assessment. We will never do that. Okay, let's do it the right way. That's how we want to grow our practices. Community, very important to take care of client interest always. When we talk to our clients and we look at the clients and our people at the center of the table, and all decisions are taken around what the client would need. So communicate to the clients, give a positive tinge to the whole merger. Make sure there's internal communications. You need to have partner meets regularly. You need to take your team together. Why are we doing this? And you need to have a whole admin function, laptops, technology, branding, basic things, right? Stationery, and make sure there's good infrastructure for people to work together. If one thinks through that, it looks a large project, but it's not so difficult. You need to have 1 or 2 people driving it. But beyond all of this, believe me, friends, beyond all of this, it's the power of purpose. For any partnership to work, it's that one word, purpose, and the power that comes with it. If you are purposeful in your endeavor, there's no reason why the partnership will not work. The fact that some of you have had your partnership for 20, 30, 40, 50 years, some of you are 60, 70, 100 years old. A lot of firms I know, even in Mumbai and across India, which are more than 50, 70 years, is the second generation, third generation, fourth generation. The fact that you have survived so much, that itself shows that there's a huge purpose. It's a family-owned firm, or it's a professional group of people who have come and who have grown the firm. The same purpose can be transmitted, and it's very infectious. It will make sure the younger partners also fall in line, and they will work with the culture of the firm. But very critical that you have defined how the firms should kind of work together. And if you have a common purpose, I think there's a lot of common achievements that can be highlighted, and that should drive the firm's growth. I'm going to pause here for a minute, but it's all about, it's fine to say that I want to grow. I'm from referring to associate models to a pure network model to a merger model. There could be 3 or 4 other ways to think, and I'm going to just spend some time before I go to call to action. One is, and which we have also found interesting, is you don't need to necessarily merge with a firm. You can bring on a practice and get the partner in along with people and clients. So that's like, in some sense, an acqui-hire. It doesn't have to be the firm. The firm can lose its existence legally, technically, it's all possible. You just get a partner on board and the clients will follow. So a Lilavati hospital gets a surgeon for, let's say, for oncology from who was running oncology clinic. This guy joins in. His clinic can also continue. We don't think that's the best model. The moment you allow the clinic to continue, you will have leakages, you will have challenges, you will have splitting of time, and that's not a model that works. In my mind, or in our mind, the experience was it should be an all-in model. The clinic has to shut. That sole practice has to shut. The specialist has to come fully on board. for your firm to grow. So that's an important point. When you're doing an acqui-hire or an individual coming, you don't keep any loose leaf arrangements. Otherwise, take some time. Tell them take 6 months. We'll merge after 6 months. Take 1 year, no problem. 2 years. Merge or announce a merger when you're fully integrated in. I think that is very, very critical. Number one. Number two, when you have referrals coming from various firms, let's say law firms or investment banks or even your regular banks, you will keep getting referrals, and 80-90% of our new business, new clients come from referrals, other CA firms. You need to have a model to reciprocate. If reciprocity is not thought through, you will not be able to reciprocate, and then you're not going to get consistent work. So one model to think is always that I'm happy doing what I'm doing. I'm getting referred work. What can I do to reciprocate? Can I, if a lawyer is giving me work, can I at least have a most favored relationship with that lawyer, saying that if I have some legal work of a client, I'm going to refer to you. I think that's a basic expectation, and that can be then grown into an associate firm relationship. So very important that we think about reciprocity from our perspective for all our clients. And my last thought I want to share there is that, look, there is no one size that fits all. You'll have to think through as a group of partners, as an individual firm, that what do you want to achieve? You need to think through your business plan. And I can't stress the importance of a business plan enough. For your own firm, have a plan for the year. April to March, Jan to December, whatever is your review period, clearly put down, how do I want to grow this year? And do I see a gap either in people or in processes or in depth or in specialization? And therefore, should I be filling that gap? Let the need come from within. Cannot be a forced need. Just because somebody else is merging, it looks glamorous, it doesn't work. A lot of planning, a lot of management time, your partner time and attention, and it's a drain. If it doesn't work out, it's a drain. It's 6 months gone. So make sure that you feel the need of growing. And if that need is there, then this session should give you enough inputs to kind of take forward. With that, let me look at some interesting ways of executing this. We discussed the why of it. We discussed, yes, it is important. The what of it. Let's look at the how of it. How do we ensure that this happens while there are phases? So I've shared some thoughts that, which has worked for us, but there are other ways as well. I think it's all about being action oriented. So first, you put a collaboration strategy document for your firm. Okay. When you're talking about consolidation of practices and therefore growing, you need to have a written document, not in the mind, not verbal discussion with partners over coffee and lunch table, but actually a written collaboration strategy document. And you put down very clearly from the rationale of the merger or rationale of the network or rationale of the associate firm to every aspect of who is going to run it. Is it one partner who is going to be responsible for driving it? Will it be a group of partners? How are we going to meet them? What is the frequency? Put down everything that you think. Believe me, it's your document. It's your plan. And the more you think, the better and finer it will be. And the more you put it down on a piece of paper, on a computer page, I think it'll be process of elimination will get you to have a real working collaborative strategy document. Once you do that, you can then share it across the young leaders in the firm, the other partners, and then execution. Just like an ERP implementation or any large project, it's ultimately project management. You got to execute with energy and with enthusiasm. And that won't happen unless people have accepted that collaboration document, that yes, this makes sense, this is the way to grow. Okay, so very, very critical. Roll it out to the larger partner group. Then if you have thought through the collaboration model well, you need to review the outcomes every quarter. Don't leave it for end of the year. March mein dekhenge, February mein dekhenge, December mein dekhenge, nothing like that. Every few months, maybe at least every quarter, question it. Are you getting the desired results? Okay, from the partner firm that you've appointed or that you've kind of as a referral model or as an associate model, are you getting the results? Should there be some course correction? To our mind, at least one partner in the firm should be responsible to lead and to ensure that the strategy is in alignment. You can pivot the relationship, realign the partnership if things are not working. But very, very important, there's a measurement and an outcome-driven decision-making process so that your collaboration rationale, your merger rationale is then executed. Otherwise, you'll wait too long to get those benefits. Now, in some parlance, again, it's like, in COVID times, you can't score 215, 50 overs and be happy about it, not even 300. When you're talking about coming together and working collaboratively, you need to be thinking about scoring 350 and 50 overs at a minimum, 7 and over. So make sure that there's enough work experience, okay, of working together when you're talking to firms. Look at their work, give them 1 or 2 clients, take 1 or 2 clients, see how best you're working together, diligence well, and meeting of minds and having a purpose. You can't go wrong in this. If you think about a purposeful association and meeting of minds, you have really hit success there. Mindset for growth is all about client centricity. Do we have the right products that the clients need? So today in COVID, we introduced a product in March saying that COVID impact study or an impact analysis on your business model. I spend a lot of time, my working time day to day, on business plans and reviewing organization development of firms. And then we take workshops on growth. And I can tell you, not many promoters have thought through this in the initial part. But the moment they understood that this is here to stay, liquidity will be a challenge, they started thinking about frugal models, asset light models to conserve cash. Right? So what is the product that the market needs? This is just one example I took. Tomorrow, if let's say the direct tax code comes, can we have a direct tax code impact study? I'm sure some of you are doing GST or transfer pricing. You've done a lot of this impact studies across. That is productization. Your service offering has to be packaged in a model where the client sees the value, and can the collaboration lead us to that? If I may not have the skill set, but can my partner firm bring that product on the table? So those are the things, being client centric when you are discussing. Ultimately, if the client accepts it, we have all grown the pie better. Otherwise, you are still A plus B equal to C. You've not A plus B equal to C into 3. Can we grow the 150, 150 to 1,000 in 3 to 5 years? That should be the goal. You should be able to achieve practice segmentation through collaboration, because we have discussed expertise space. Okay, and just summing up, if you lead from the front, I think taking decisive steps will convey the confidence to your partners who are coming on board. So you need to have an inorganic growth strategy and quick action, and you should be able to navigate those waters. Okay. I would like to conclude by saying that you need to have a resolve. We need to have a will to disrupt ourselves. Okay? Even working from home, friends, some of us have seen tremendous growth. Personally speaking, I have never been busier in my career than last 3 months. My wife and my daughter get upset when I don't meet them for hours together, only for lunch, etc. And I've tried to change that, but it's tough. Just so many clients need so much of handholding, so much of help. I'm sure some of you are seeing a similar dynamic. But if you think about disrupting yourself, working with like-minded people, I think you will see a lot more time. It'll be a very happy experience to grow together. Believe me, friends, partnership is all about working together. And you will lose something. Even if you lose something in the initial period, ultimately you will gain. So I think it's a resolve that can we disrupt ourselves using best technologies, get more people associated, and really grow together. I think that's the last message that I wanted to share, that even sitting at home, we can all work pretty well. Okay. So I'm going to pause here. I'm going to take questions, and I'm going to invite the organizers to kind of put some questions over, but happy to kind of also address as we go forward anything else that comes to your mind. If any of your firms are thinking about growth and thinking about associating, and if you have any problem statement, please write to us. I just wanted to share that 2 of my friends, Nandita Parekh and Amit Patel, and myself, we have come together. We call it the NAV initiative. All of us are in separate firms, but we are happy to help within a defined time frame. If you have any questions, to kind of share our experience and get specific queries. So do write in whenever you need any assistance. But with that, Ashita, I'm going to pause and over to you for questions.
Yes,
and you
sir.
can answer them as well.
No, sir, if you are there, I won't take that opportunity. Sir, we have the first question from Sandeep Mukherjee. It states, in this model, what and whom would be the competition, and what is the strategy to match this competition?
Sandeep, I think there was one question which I lost. Let me just get back to the other. I think you have asked 2 questions. Ashita, give me 1 second.
Yes, sir.
So the first question actually was the other one, which went into the other column. So is there a platform which can bring together like-minded professionals? It's important that as professionals, we know how to reach out and be available for networking. Just a suggestion. So I think I would say, Sandeep, look at the chamber itself, CTC, BCA Society, our institute. I think these are great, let's say, models of working together. There are a lot of conferences, currently webinars, but all these years, a lot of events. I think if you be part of societies and part of some of these forums and a lot of committees and where you can contribute, you will meet like-minded professionals. To my mind, an association with CTC and BCS has given me access to so many professionals. I think that's an easy way to do it. Of course, there are other platforms. If you look at the larger horizon, you have CII, ASSOCHAM. There are a lot of industry bodies where you can kind of network and you'll be associated with their auditors and with the larger businesses. So that's one way to think that can I go to platforms. Networking is a personal art. Sandeep, you will have to make that effort. Okay. When you go and attend a conference physically, as and when things open up, I think you need to exchange your cards, get people to know more about you. If you can write more and speak more, you will get automatically, you'll get a recognition. Okay. So that is one way to think. Your other question was about in this model, what and who would be the competition and what is the strategy? Believe me, the only competition is your mindset. Okay. There is no competition. The audit business is in India is 10,000 crores. Friends, it is 10,000 crores. Tax is 5,000 crores. Consulting is 100,000 crores. It's up to you to kind of deep dive and say, what can I do out of this pie? There is no competition. Believe me, it's all in the mindset. There's so much of work available. Sometimes it's our own bandwidth and our own limiting factor. So you should really not be worried if somebody else is doing work better. Learn from them and do better with your clients. So to my mind, there is zero competition if you think openly, right? The only other comment that I want to make is if you observe some of the professionals who have done well in life, if you just imbibe those, the real professionals, we are not talking about big brands and marketing and advertising, nothing of that. I think most of those professionals, look at Bansi Mehta, look at Soli Dastu, look at some of our stalwarts in the profession, look at all our presidents, some in this room, some outside. They've all done something very meaningful and with a lot of purpose. And that is where they have grown as professionals. If you just follow that trait, I think you will do very well. Okay. Sandeep has asked one more question. Let me take that as well. Could you please explain the revenue models that would work best under each of the models? How do we ensure it's a win-win? So I think revenue model remains the same. The moment you have, let's put it this way, in a referral model, in my mind, there should not be any referral fee. I'm completely against the concept of referral fees. Even the institute, I think, does not permit, and that's right. You don't want to be brokers here. Okay? The question of referral fee shouldn't exist, is the way I think. The better way to think is, if I am associated with somebody, let me make sure that he or she is giving the right quality of advice, quality of service, and being responsive to my client needs. I think the client will thank me and I'll get more and more work. That should be the assumption, that I've given the value to a client. Okay? Now, when it comes to network, and then when it comes to a merged firm, that's where there are revenue models where you have to think about geographies, to think about various specializations. So one way to think is that when you have a larger partnership firm, okay, every partner should have a goal sheet at the beginning of the year. If you're following April to March, maybe in February or March, you sit down with the partner group and have a win-win model for every partner, saying that here is what you will do. Whether it's, of course, a revenue model, here is your current billing. Can you take the billing to this? What will you do to get there? Profitability. It's not just revenue, it's gross profit and net profit to the firm. Then what are the other functional areas that you will contribute as a partner? Technology, markets, IT, admin, infrastructure, HR. Everybody can kind of work together for a purpose, for a goal. Once you put that in writing, to my mind, you would have achieved a lot in terms of telling your partners that here is how the firm will assess you. Revenue profits is one weightage, maybe 20-30%. We have a very low percentage for revenues and profits. For us in the firm, every partner, every manager, every senior manager, there's a lot of weights given to the other contribution. How are you working with others? How is your knowledge sharing? How are you improving the profile of the firm? Are you writing enough? Are you speaking enough? Are you contributing enough? Are you giving back to the profession? Even that is an important measure. Is your team happy with you? So a complete 360-degree review. And Sandeep, if you do that, if you make sure that you've taken care of your team, your partners are automatically taken care of. And then there's no question of worrying about whether they've made enough. I think if you have thought through all of these aspects, your HR process will allow you to grow fast. Yeah, Ashita, we can take the next question, I guess.
Yes, sir. Do you think merger of two firms with same seniority? This is in the context of what you said that there can be only one caption. How to choose the caption and wise caption in that case?
Great question. Firms can be of whatever seniority. Okay, you need to have trust. Look at Mr. NP Sarda. Even at the age of 65, 70, he was the chairman of Deloitte, and he was leading a lot of partners. There were some partners senior, some not so senior, but there were a collection of 4 or 5 firms, and they were able to continue for a good time there. But look at even smaller firms which have come together. You need to have respect and mutual trust between partners. Then who leads it is immaterial. I would much rather that somebody else leads me as opposed to me worrying about leading the firm. Let me focus on my client. That's one way to think. But if you have two captains in the boat, it's going to be counterproductive. There'll be a club culture. There will be people will be following that partner who have already worked with them. You'll never have the best way to grow. You can always have a rotation. You can always have a 3-year term or a 2-year term, and you can always have an election. Even in our firm, we have a managing partner concept from day one. And every 3 years, the managing partner is up for election. It just so happens nobody wants to become the managing partner. And therefore, the same person gets re-elected, much against the person's choice. But on a light, that's in a lighter vein. Largely, you cannot have two people driving the same decisions. You have to differ. But yes, partnership firms, accounting practices are normally driven by unanimous decision making. Now you need to think through what decisions would need a unanimity and what decisions the managing partner or the senior partner or one designated partner can take. Once you make answer that, I think the rest will follow. But I understand your point on senior firms coming together, and you will need to resolve it before you merge, not after you merge. That here is how we are going to appoint a managing partner. But to my mind, that is very, very relevant when you have senior partners coming together. Yeah, Ashita, you want to take the next one?
Yes. In network, are we responsible for quality issue occurred by networking firm in the work assigned to them?
Great question from Mr. Rajendra. When you say network, so again, there are two types of network. One is a registered network with the ICI, and the other is an international network. You're part of a larger network internationally. Now, after the Enron example, where Arthur Andersen collapsed, most firms have learned from that and said we are country partnership, we are individual partnership. So legally, maybe you can get away. Legally, you can say that I was not responsible for that firm, okay, because I'm not merged. It's a separate firm, and you can have those protections, and that will work. But your brand will get impacted, Mr. Rajendra. So that is very important. Okay, whilst you may legally get away, ethically, morally, you still have to stand by your partner firm, and you need to have processes in place to ensure that quality issues don't happen, because that will mean that somewhere you've not given enough attention to reviews. So we, for example, for every office, there's at least one more partner of another office independently who reviews every opinion or every work that happens. So I think quality is a function of well-defined processes. If somebody has bypassed those processes, then you are not responsible. Then you can very easily say that, look, here was a defined process, somebody has bypassed, we are sitting here, we couldn't do. You need to have professional indemnity insurances in place so that you don't have to worry about litigation coming onto you. I think that's something which one should really take care of. But clearly, one can have processes and one can have partnership deeds which limit responsibility beyond a point. And LLP structure again helps you there. Yeah, Ashita, we can take the next one. Please dwell about revenue sharing models amongst partners in a network firm and also merged firm. I think the revenue sharing model, let me give a simpliciter there, right? Let's say in a merged firm, it's not so difficult because everybody is in one partnership. You have different areas of experience. Somebody's into audit, somebody's into tax, somebody into consulting, for example. The way we would think about sharing is you assign a responsibility and you assign a book of business. Okay, and there is a salary, a fixed salary that is decided. Then there is an element of variable salary or variable component, a variable bonus, which is linked to performance. And then everything else flows through to the larger pot, which is then divided based on equity. So the easier way of thinking about compensation then is fixed pay, variable pay driven by bonus parameters, performance parameters, and then a share of profit at the end of the year, what trickles down, which is then divided across all the equity partners. That's one way to think. The other way to think is, let's have an equal pay up to a particular level. Lot of the larger firms have a level-based pay, that everybody at the manager level, this is the band, senior managers, directors, partners, this is the band, and the rest goes to the equity partners. Equity partners share, you keep some reserve aside, and then you share the next. But again, revenue model, sharing revenue, if you have come together and you are restricted to service lines, then you need to have a well-defined cap, upper cap of the revenue from that service line. So one can very easily say 35% or one third of the revenue of a particular service line is available for the team for distribution. One third comes to the firm for common expenses, for allocated overheads, and the balance one third will be shared between the equity partners and the partner who is driving the business. So one can have various formulas there. There is no one right way. We have found that the simpler the model, the better it is. We have a process in the firm called pay for performance, a very unique model where there is no entitlement. If I am sitting at home and doing nothing, I don't get paid. I may have founded the firm, it means nothing. Now that's very different from a lot of the firms in this room, which will want a specific minimum allocation to partners basis their entitlement, basis their equity holding. We think that that could be a disservice to the younger partners, but it's a little controversial topic. The way I would think is I should earn my living every year, and then my equity will take care of any residual profit for which I have worked over the years. And that's how goodwill is built, as a retirement goodwill. And one can today even fund retirement goodwills through existing profit plans. There are insurance companies which have come up with amazing products for professional service firms. So partner remuneration and partner compensation can be achieved by designing revenue through a service line, and then at the equity level what goes for a larger pot or a larger sharing.
Okay.
Yeah,
Next
Shita.
question. What should be the basis of sharing common pie or revenue of merged firm between the partners based on seniority, experience, one who brings business or one who executes, or any other basics?
I think you have answered all of it in the question itself. Like I
Okay.
said, so the way to think is, um, if you are one partnership firm, and once you have decided, of course, seniority is important, experience is important. So you got to decide how are we going to share the pie, right? So you, like I answered in the previous question, have a partner goal sheet and say that here is the book of business that you are responsible to deliver, and in this profitability. If you have done that, then you have basically performed for the year, in which case you will get your fixed pay, plus you will get your full performance bonus, and you have a very good chance of getting a good chunk of the residual, which goes to the share of, to the larger common pool of equity partners. So that's one way to think. Now, how will you define a fixed pay? Clearly, there are market multiples available. There are, for mid-size, for small-size firms, for large-size firms, there are enough data available today where you can say here is a band. Okay, for a mid-sized firm, let's say a chartered accountant starts with 4.5, 5 lakhs going on to 6 or 8 lakhs. As he grows, you increase the 20% for each level. And by the time he becomes a partner, he'll be upwards of 25, 30, 40 lakhs and upwards. If the revenue size is much more, you're also talking about crores. So that's the band that you work within. And are you able to pay that to your partners? That will be the litmus test of how you are going to share the revenue. So 35, 35, 35 is one way to think, one third each. So people cost is one third, allocations and overheads is one third, and balance is firm's profit, in which the partners and the residual amount is then shared. So that's one way to think. But again, these are things which are very, very customized, very hard to say this is the only way to do. I'm happy to kind of understand how you are thinking about compensation, and we can work a win-win model. We should then work across your partnership.
What is ideal way to exit if you are in wrong merger?
So you're saying, how do I take a divorce? Basically, you got to go to a family court. No, but on a lighter vein, Bharat bhai, I think it's important to, I'm hoping your partnership deed provides for a termination or an exit or a retirement of a partner. If that, or if the firms are splitting, I think the best way is to do it amicably. Just sit down with the other firm which had come, or their partners, and say, here is why things have not worked. Can we just go our different ways? Today, when we are looking at merging two firms, we have a 3-year look-in period, a 3-year period that if things don't work out within 3 years, we just go back to a separate ways. My client are my client, your client are your client, will not compete. I think somewhere a written understanding always helps. But if that has not helped, I think sitting down amicably, Bharatbhai, is the best way to think about this. And again, if it's become a hostile environment, then I think the patient will find the surgeon. Don't worry about losing clients. If you are the surgeon of choice, the client will come back. Just give it up and move on. I think that negativity you'll spend a lot of time in untackling. We just move different ways, and with the assumption that our service model is good enough for the clients to come back to you. We have demerged from a very large firm about 15-16 years back, and I can tell you 95% of our clients in a year or so came back to us, because again the surgeon over hospital argument works pretty well there. Okay, we have questions on flat organization structure works better or linear. Frankly, I'm not a big advocate of structures. I just feel that it's merit driven today. Why should a youngster in my firm get deprived of good quality work just because he has not spent enough time in the work? In fact, um, I'm not a big believer in levels. I think one should have 3 levels: associates, managers, and partners. I know we all have 6, 7, 8 levels, but if you see the successful firms and look at law firms, especially in the US, they only have two designations: associates, partners. That's it. We can have a level in between, but you don't need very complicated structures to be successful. In fact, simpler the better. Look at venture capital firms. You have associates, you have partners. That's about it. I think the world is today becoming flat, and I don't think structure should impede growth. It's all mindset. If people with the right mindset should not care about designations.
Does merger of two or more firms with more or less same work profile really works, and is it advisable?
It certainly is advisable as long as the mindset is good, Vishal. I think one can get a lot of synergies out of working together. Just look at it. Whilst more or less the work is same, you will have more expertise. The same partners will have more time on hand to work better, to collaborate better, have more quality in their work, and you can then have centers of excellence. So today, just look at tax or look at audit. It is getting complex day by day. Two partners are better than one, four are better than two. So some sense, even if you are same size, A plus B should not just be C, it should be C into 2 or C into 3. That's how I think about mergers. So it's a question of executing it right, and you should see the benefits of working together.
Billings are different for different geographical locations. So how do you address that issue? Example, Mumbai and Indore.
Great question. Again, I think the indoor partner, okay, for him, 100 rupees is not what 100 rupees means in Mumbai. There's also a cost of living adjustment. There is a purchase power parity. So one should look at relatively what is the revenue. I was addressing a session in Jaipur about a couple of years back, the Jaipur Chartered Accountant Association, and we did a survey, and we found that the average revenue per partner is 19 lakh rupees. Now, indoor may be similar dynamic, maybe 15 lakhs, 20 lakhs, 30 lakhs. That will not be the case in Mumbai. Mumbai, definitely, we are doing much, much more. But the cost of living in indoor cannot be compared to Mumbai. So while the revenue is not comparable, so is the cost. So therefore, partner in that indoor branch of yours or that indoor firm should then be his revenue will then limit his compensation. But that's good enough because there's equivalent lifestyle that's there. And therefore, one can equate a purchasing power parity concept there to kind of bring a win-win model of compensation.
We have a question as what has your experience been on international networks and benefits thereon vis-a-vis the India business? Also, some thoughts on standardized learning and education models for network firms.
I think it's not vis-a-vis. I think international networks definitely give you a lot of exposure to the way larger firms work, global firms work. But remember, Sandeep, you also have to then invest time and efforts and money. You have to be attending all the international conferences. You have to contribute back. You will be the India firm, or you'll be one of the India firms. You have to participate in giving back to get more referrals. So clearly, international network would mean you will get a lot of inbound referrals. And to that extent, it's a big positive, but you have to be prepared to give back. Vis-a-vis that, India firms have their own dynamics. All of us know what we are doing, but you can have a larger bid, a larger consortium-driven, bid to a project. Your profile will look much better, much deeper. So you will automatically qualify with CAG, with RBI, with all the empanelments to do bigger work and better work. So in that sense, it's not A versus B. It should be A and B, international and domestic.
What are generally the parameters to determine performance bonus? Please elaborate.
So Satish bhai, the way I would think is, one is I would do a KRA. Okay, I would do a scorecard and I would say, here are the 10 things in terms of goals that I expect the partners to do. So my own partners will rate me and I'll rate them. We have an open culture. So what are those parameters? I would start with, what is the contribution to the firm? Okay, contribution could be in many ways. Contribution could be in adding, of course, new clients during the year, building the brand, writing, speaking, being visible, getting good people, building teams. So I put each one of them. Let's say I'll give a 10 score to all of them and I build a scorecard of 100. Okay, quality of work. What do others think of me at my level? What do my partners think of me? Get a rating done. What do my people think of me? What is my contribution to the functional areas of the firm? The admin, markets, HR, technology, everything that I'm contributing, whatever I'm good at. And that scorecard on 100 will tell me, supposing I've scored an 80 on 100, okay? And my allocation of fixed versus variable is 75-25. Then of the 25%, I should at least get a 20, if not the whole amount. And the 5 that I'm not getting will spill over to the larger pool. So we have a very simple process there without worrying about a lot of allocations. We, from 80-20, we went to 75-25. Now as partners, we've come to 65-35. So 65% is fixed, 35 variable. And 35, if I'm not done well, the entire 35 will go to the larger pool, which also I'll share something because I'm an equity partner in the firm. Right? So that's the way to think about allocations.
Is multidisciplinary firms permitted?
Um, The answer is no. I am told the Bar Council does not permit legal firms to ally. Although the accounting profession has evolved, the institute president was on record 2 weeks back saying that we have allowed. I'm not sure if we can work with law firms, but you can certainly have consulting firms associated with law firms, and you can work together in a consulting umbrella. So whilst one cannot have a chartered accountancy firm and a law firm merged, but you can have multidisciplinary partnerships in terms of consulting, and that's still possible. Again, within the constraints of institute rules, I know of a lot of firms which have done that. So I think it's possible.
Does consolidation of practices ensure a longer and more active working life for senior professionals?
Well, active working life, it's a personal choice. I may not want to work beyond a particular age. I may want to take it easy, whereas somebody may want to work through and through. So it's again a personal choice. I don't think it's a function of till when I want to work, but from a succession planning perspective, if I have a larger pool of partners and if I have consolidated well, I can pass on my practices faster. I can get my retirement benefits, my goodwill faster. And I think, therefore, the answer to this is, do I firmly believe in succession planning? Do I at some point want to, get out of the team and be a coach, be a mentor? The only way that will happen is if I've passed on the baton. I can't keep batting and opening the innings till the age of 45 and 50 and 60. It's not physically possible. You will have to groom younger talent within your firm. You'll have to work with other firms and then have a larger pool of talent to grow. Okay, so to some extent, this is also addressing a succession planning.
Okay, so we have 3 minutes to go. Would you mind taking one more question?
Yeah, absolutely. All yours, no problem.
Three proprietor working in 3 different area: direct tax, indirect tax, and audit. And when the client work come, it gets allocated as per the area of work between 3 proprietor, and fees are charged directly and year-end work on margin and intercompany bills raised. Is this okay as consolidation where every proprietor has separate office?
Well, there is no, Rajesh bhai, there is no one way to think, like I said. If this is working for you, great. You don't have to merge. If 3 sole proprietorship firms are working and you are having different service areas, if it's working for you, great. The question to ask is, are you guys growing fast enough? Every year, whether direct tax, indirect tax, and audit, when work is coming and allocated across these 3 firms, are you growing well enough? Or is there a better model there? So I would ask that question. Supposing I wanted to, have a consulting practice coming in. So you said direct tax, indirect tax, and audit. I didn't see consulting. Now, should you take consulting work or are you passing it on? How would you grow geographically? How would you grow if you get a larger listed company? And do you have the resources? Do you have the bandwidth? So to my mind, that's a question of proprietorship firm versus a partnership model. One can very easily continue the way you are continuing as long as you are getting the desired result. If the outcome is not fast enough, if you're not growing fast enough, and how would you address succession planning? How would you address client branding? I think a lot of those questions will lead you to believe that you should maybe network better and ultimately come together. So I think consolidation, this is a good way to continue if you are okay with not worrying about succession planning, etc. But if that is important, you'll have to think about a single umbrella.